In today's energy markets, let's take a look at RBOB futures today as they're realizing a nice bounce back today. After a couple days of selling pressure, we're seeing RBOB gasoline futures pushing higher today, up about just under 1% currently, right around the 132 level. And as they recover here, we are seeing them pushing back up towards the recent highs. And if you look at the recent highs, those are really multi-year highs as well. We're challenging basically the highest level in the last 7 years up here around the 2.15 to 2.18 level, which we did see them touch a couple days ago. And when you look at some of the factors playing into, I think, why we're seeing RBOB futures holding on to these gains today, I think there's a couple things. The narrative around the driving season, we continue to see projections unfolding here the last couple of days, indicating that the expectations are for a significant increase in driving activity this summer, particularly relative to last summer. But even when you look at it relative to the previous summers before the COVID-19 virus, the expectations are we're going to see quite an increase here and possibly challenge even the levels that we did see virus. So there's, I think, a belief that there's going to be a significant increase in demand as we move through the summer. Couple that with production runs, I think, are under what has historically been the case as well, as we're seeing some of these rigs offline. Now they're coming back online. But nonetheless, I think there's concerns about supply as we move into the summer. So those are two factors. The third factor is the U.S. dollar. It's under some pressure today. Big reaction to the unemployment numbers this morning, which came out much lower than anticipated. Pushing the dollar, U.S. dollar, quite a bit lower, pushing it back down towards the lowest levels of the last couple of months. And with that, I think that's benefiting RBOB futures when you look at the price action. Now, when you look at the trends, I want to point out RBOB is very interesting in the fact that we are holding here, as I mentioned, basically at 7-year highs, just off there. If we were able to push above that 2.18 level that we did see the intraday high a couple days ago and close above there, that basically would take out or break above the highest level for RBOB over the past 7 years. You have to go back to September of 2014 to see them trading higher than this current level. And couple that with WTI futures, where you're looking at WTI futures still well below levels of 2018. So we're seeing a dispersion unfold here in the last several months as we're seeing RBOB futures definitely outpacing WTI futures as far as a percentage return.